Looks like I'm live. There's always a lag here. So I hate that usually in the beginning you get me not smiling or looking, because otherwise I'm just going to sit here. It takes like a good couple of minutes and I'd have to sit here the whole time, just smiling, waiting for it to go live. I've got to figure out something, I don't know, something fun and interesting maybe to do while I'm waiting for it to go live. In any case, here we are today, the second Monday of the year, I believe we're in. It feels like a lot longer than that. We have been rocking and rolling already at Homes by Mason. So today is January 13th. I believe it is the second Monday of the year, second Monday market update. So welcome. Thank you for joining us. And we're going to talk about what's happening in the real estate market in Northern Virginia and beyond. So anecdotally, I'll let you know that at Homes by Mason, we did put a listing on the market last Thursday. Despite all of the snow, we did have a lot of snowy weather, and we debated, should we list or delay? Because we had a lot of snow, and then we were projected to have more snow over the weekend. We did get a little bit of snow Friday night. And long story short, we did end up listing that listing. I rolled the dice a little bit on the snowstorm that was coming Friday. And we have had just over 40 scheduled realtor showings on that listing. I had about 20 groups through the open houses that we held Friday night, Saturday, and Sunday. And we already have 3 offers in hand. We have a deadline set for tomorrow. And so we should be ratified on that home above asking price, knocking on wood, tomorrow. So early in the year, you're never quite sure what's going to happen, but that is what is happening here on my ground right in front of me at Homes by Mason with our newest listing in Alexandria. So we'll also get back to hyperlocal data at the very end, but let's rewind and take a look at, or move up, I guess, take a broader look at what's happening in the market. Interest rates as of last Thursday had gone up 6.93. We are just below 7% again. And there we go. I'm looking for my arrow. Look at me getting fancy on you all. So take a look. Compared to the 4-week average, we're higher, right? So this is higher than we've been for a while. 6.85 is the 4-week average, and then the year-long average is 6.73. So we have been lower for most of recent history, and hopefully we will get back down lower. In the past year, our lowest point was 6.08 and our highest point was 7.22. So we are not at the highest point, which is good news. And what is to come? Well, let's see. MBA and Fannie Mae expect mortgage rates to stay above 6% throughout the year. And that's what other people are saying as well. I shared that last week. I'll share with you again in the next slide what the predictions are for interest rates this year. So due to a strong economy and possible rising inflation, that is what they expect for interest rates. And looking back at last year, high mortgage rates and home prices did drive the median monthly housing payment to a record high of $2,775, just under $3,000, up 11% year over year. That is significant, and that does impact overall housing affordability, which is a factor that we will continue to watch. People can't buy homes if it's not affordable for them. There are a number of factors that go into affordability, mortgage rates being one of them, and jobs and wages and the cost of living. All of those things go into affordability, which is why we look at a number of factors here each week to determine what's going to happen with home values and home purchases. We'll continue to track that in the Monday market update each week, so come back and keep watching. As far as purchase applications, how many people out there were applying to get a mortgage for the week was 15% lower than the same week a year ago. And that's likely related to the higher interest rates that we're seeing right now. The Fed, their notes from the last meeting showed that they are not planning to cut rates as quickly as they had previously expected to be doing so, considering the inflation risks with the economy overheating. So again, that brings us to here, the forecast as of January 6th, and I'll update this again throughout the year as we get the new information and new predictions. But interest rates, you can see for the year 2025, the average of all of these predictions is 6.36. So if you're looking for interest rates to go down into the fives, you're going to keep waiting. So in the sixes and, hopefully below 6.5 and hopefully well below where we are right now, but we just never know. They've been quite unpredictable in the past year. What are we expecting for home prices in 2025? We are expecting home prices to increase. Only 2 predictions show a decrease in home appreciation. So the average of all 21 predictions here show us at just under 3% price appreciation in homes. And that's national, especially in the Northern Virginia area. And we'll talk about this here in a minute. Prices do tend to go up year over year. I've been doing this 15 years. And frankly, I don't know if I've ever seen prices go down in that time frame. The overall number of homes sold in 2025 is also predicted to increase. So you can see more homes than in the year behind us, but we are still less than the number of homes that were sold in 2019, 2020, 2021, where interest rates were significantly lower. So there is a new normal with interest rates, and hopefully homes remain affordable to allow more homes to be sold next year. Selling homes is actually good for the overall economy. It does generate and stimulate a lot of other economic actions when people buy homes. So for the Mid-Atlantic region specifically, what we are seeing is fewer new listings to start the year. We also saw that in our hyperlocal area that I'll share with you. And I didn't know this, though. New listing activity was at its lowest level in 5 years. So that is a little bit concerning. Again, we need more inventory. So, for homes to be more affordable, price is a matter of supply and demand. And when supply is not there and demand is, which it continues to be, prices go up. And that's why we continue to see prices going up. Buyers, though, were also down in the Mid-Atlantic region, again, at its lowest level in 5 years. My interpretation of that is at the end of last year, I was still here doing Monday market updates every Monday, and we were actually seeing a lot of buyer activity at the end of last year, which I thought might have been related to the election, because in our area specifically, during election season, a lot of people put their home search on hold to find out if they're going to have a job or not, if they need to move or not because of a change in administration or not. And so we did see a lot of buyer activity at the end of last year in our area, in our hyperlocal area especially. So that might have been why then there's a little bit less activity now, because there was more activity at the end of the year. That's what I'm seeing. And list prices are still rising, except they said in the Washington, D.C. metro area. However, look at here. This is the snapshot for the DC metro area as of January 5th. And frankly, it's flat. So median list price is not down year over year. 0.2% really doesn't count. That's really, frankly, a flat price year over year. So otherwise, compared to last year, showings in the DC metro area are down compared to the same week last year. And so, again, that might be related to interest rates. Purchase contracts are down 6%, time to contract up by 5 days, new listings down by almost 6%, and active listings up by almost 16%. So that's our supply number, how many active listings we have. So that's good news to see an increase in supply year over year. And a decrease in showings might also contribute to an increase in supply. So that could be good news for affordability in our area. Compared to a week ago, so we're comparing to the end of the year. So of course, most things are going to be up. Showings were up a lot. New purchase contracts up 13%. New listings up almost 100%. And list price up. We will expect to see prices go up basically week over week over week. Prices should be doing this at this time of year. And active listings down a touch week over week, which is interesting. So that's for the larger DC metro area. And then at Homes by Mason, we do you the favor of running the hyperlocal data up to yesterday. So we've got 2 weeks of data here for the hyperlocal market of Arlington, Alexandria, Falls Church, and Fairfax. And you can see here that year over year, our supply in the hyperlocal area is also down. So less new listings, 19% compared to the Year before, for the first week of the year and the second week, we're down 9.22% compared to the year before in terms of new listings. And then contracts, how much buyer activity, how much demand is out there, also down year over year, the first 2 weeks of the year. Again, that might simply be because we had more buyer activity at the end of the year, more so than what we would normally see. So we will continue to watch this. I will continue to watch this. I hope that you'll continue to watch with me. Come back every Monday to YouTube or Facebook to watch my Monday market update, and would love some feedback. If you can give me comments or give me likes on Facebook or YouTube, would love to see and hear if you find this information helpful or not. If you want more of something, less of something, please let me know. And if you ever want to talk to me directly about what's happening in your area and how it impacts you specifically, reach out anytime. 571-210-1866. You can call me or text me there. And you can email me at kristen@homesbymason.com, or there's a link down below where you can schedule an appointment with me at your convenience. So thanks for watching and have a great week.